we able to acquire the information for our latest short position?
Yes, and we beefed it up with information from our usual anonymous sources.
Good. Good. You did mention the potential fraud that may be taking place and their alleged use of inferior parts.
Yes, sir. It's all ready for delivery to the world tomorrow.
Excellent. Send in the executioner. Prepare to make billions.
It's the nature of securities markets to occasionally promote various things to the sky, so that securities will frequently sell for 5 or 10 times what they're worth, and they will very, very seldom sell for 20% or 10% of what they're worth. So therefore, you see these much greater discrepancies between price and value and on the overvaluation side. So you might think it's easier to make money on short selling.
As Warren Buffett, one of the greatest investors of all time, explains it right there in that clip, it is much more likely a stock is overvalued than undervalued, and that is one of the main reasons why people short stocks. Combine that with people who are just contrarians by nature and are very good at realizing plays before the vast majority of other people do, hence why it looks like they're swimming the wrong direction when they do make that play, and you have the makings of a short seller. Now take Michael Burry for example, who is famous for shorting the housing market and banks during the financial crisis, and he was made even more famous by the movie The Big Short. Hindsight says it was easy to see the crash coming, but at the time everyone thought he was crazy, and that includes his own investors in his fund. And despite the fact that he made all of them extremely wealthy with his trades, many of his old investors will not even speak to him again, much less invest with him again. When you win in a short position, you win far bigger and far quicker typically than you would going long in a different stock. Now yes, the degree of difficulty is much higher, and yes, the risk of loss is theoretically unlimited compared to being long in a stock. But the rewards for getting it correct come far quicker than going long in a position. For as much heat as he takes, Jim Chanos is worth $1.5 billion, mostly in part to shorting stocks. And I would love to suck as bad as he does, and probably so would the rest of you if we were being honest, if it meant being worth over $1 billion. And before we go too far cracking on the guy for shorting Tesla, he did make $100 million last year on other short positions, so it's hard to say his method doesn't work despite being completely wrong on Tesla. Nobody hits on every position. And he is far from the only one making billions of dollars doing this. Take the latest short seller favorite, Wirecard. Multiple short sellers cashed out $1 billion plus paydays off that stock's fall. That's not making $1 billion off a long bet of 5 or 10 years. That is making $1 billion plus in a matter of months. So these types of monster paydays that happen rapidly lure people in who have the right personality and risk tolerance disposition necessary to take on these positions. The argument for short selling being illegal has been around for decades. And certain types of short selling is illegal. For instance, a naked short sale cannot be executed if the institution does not locate the shares to sell in advance. If they get caught without having those shares to sell, they have then broken that law. But most other forms of short selling are perfectly legal here in the US. But there have been recent movements to ban short sellers in other countries, and the data from that is incredibly revealing. But hang tight, we will get to that here in just a minute. So let's go over the most common complaints made against short sellers. As the past few years have clearly brought to light, a statement made on social media is treated differently and protected by different laws than a published report is. Hence why you see the most egregious statements made on social media While the reports, although they are inflammatory, are less opinionated in nature, even if you don't agree with the research or the premise, they're just not as crazy as the social media posts are. So why does Elon get into hot trouble with the SEC for his Twitter comments, but Chanos or other short sellers don't? That's actually quite simple. Elon has insider information. Chanos and other short sellers do not. So Elon's tweet is considered market manipulating due to his access to real information, and it's no longer considered an opinion. Which leads us to the other major complaint against short sellers. This has really gained a lot of light this year with so many new investors being involved in the stocks that have been hit with these hit pieces, but it has been around for a long time actually. So why are Citron, Hindenburg, and others allowed to release these reports with a very negative view of the stock and sometimes even make very serious allegations without any real consequences? Well, this is answered by this very simple question. How does this play out in a courtroom? So let me kind of mix together a modern example with the litigation that has gone on in the past. So the biggest question to really answer is, why can ARK Invest release a report with sky-high price predictions based on a future that is not known, and Citron cannot release a similar report with a crazy low price prediction based on the same unknown future? You cannot argue that Citron stands to directly benefit from tanking the stock because ARK stands to directly benefit from pumping the stock up. And those are exactly why this argument dies in court, because both are serving their own interest in the eyes of the court, and both parties are just making a guess in the end. And for every time Gordon Johnson is wrong about Tesla, you have a Hindenburg research who is spot on with Nikola, further muddying these waters. So it's very tough, if not impossible, to win court cases against short sellers as long as they meet a few wickets and have the proper disclaimers attached to their reports. This has all been litigated before and the precedent is set. So it's useless for Elon to go after those short sellers because his lawyers will advise him that this has already been litigated out before. So why is short selling even legal in the first place? Now, selling short being illegal gets brought up occasionally within the US government, and other countries in Europe have actually done it. They have banned short selling altogether. Unfortunately, the data shows that although temporary bans and panic situations help stabilize the market during a crisis, banning short selling overall basically has no impact on the day in, day out trading. And the data also shows that markets that are in decline continue to decline even after the ban was instituted. This applied to both individual stocks and overall markets where it was instituted. So they thought banning the short sellers would help their markets, and it just did not help at all. This has been studied and looked at multiple times in the US's history, from the 1930s to the 1960s to the 1980s, and even in 2008. But the conclusion is always that the data does not support the idea that short sellers should be banned. They should just be monitored and have to operate within certain rules. That is why it has remained legal over the years and will continue to be legal into the future. So if short selling is here to stay, and don't be fooled guys, it is here to stay in the US markets, how do you deal with short sellers who are looking to destroy your investments? Well, first, choose great companies to invest in. For example, I don't care what comes out about Apple or Google or Amazon from any short seller. They are great companies to own, and I do not fear any short seller article, tweet, hit piece, no matter how good it actually is. Second, have a plan with every stock you own so you already know what to do if there is a sudden drop from a short seller attack. This is exactly why I hammer so hard on having a plan in my course that I offer. The plan allows you to eliminate emotions from your decision making so you don't get caught up in the hype loop, either up or down. Both of those can kill your investments. It's not just the short sellers, guys. And this is especially magnified in the chat rooms, on YouTube, and on social media. Having a plan completely eliminates the noise, and that's ultimately all that a hit piece is. It's noise to create a favorable situation for a short seller. But wait, it gets even better. Here's where the good news about the data we just discussed about short sellers works in your favor. The data clearly shows that great companies with great balance sheets, with great products, and a growing business are largely immune from short seller attacks. Now sure, there may be a temporary drop that causes wannabe traders and those without market discipline to lose money and trade out of their positions. But that is the very essence of capitalism, and those who understand what is going on just got an opportunity to add shares at a discount, which is a great spot to be in. I could not find an example, not one example, of a great company that was killed off by a short seller attack. Now maybe it does exist, but I couldn't find it. Now there were lots of examples of struggling companies that got killed off, and if I'm being honest, they were going to die anyways, it just got accelerated a little bit. But I could not find a single example of a great company with a great balance sheet that they were able to topple over. So for those that are disciplined and have a plan, short seller attacks just create opportunities for us to build real wealth.